Yet another day that US gold prices have stayed put at the record high levels, managing to in fact touch the $1,940 per ounce mark. And this time around, adding fuel to this fiery rally was none other than the dollar index, which by the way slumped to a 2-year low. Now remember that gold and dollar prices are inversely related. If dollar prices go down, gold prices go higher. However, at this point of time, it's not just the dollar, but there's a perfect storm brewing that's causing gold prices to go higher. Remember that this week we have the 2-day FOMC meeting as well. So just a basic macroeconomic explainer is something that will perhaps help you understand how gold prices move in relation to dollar, in relation to interest as well. As we know, gold prices firstly do not carry any interest. They are non-interest bearing assets and they do not have to pay out any interest to the investor or the holder. The dollar index, meantime, as we know, is already moving higher. It's been under relentless pressure, by the way, in the last couple of trading sessions, but it's only exaggerated in the last few trading sessions. The FOMC meeting is going to commence and we would be having an outcome this week. In all probability, we are going to see an accommodative stance being maintained, which means interest rates will continue to stay extremely low. However, what's interesting is that the Fed may also, because of that, be more tolerant towards inflation. So when you take away inflation from interest, you're actually staring at a negative real interest rate. In such a situation, investors rather hold a non-interest paying commodity like gold versus other instruments that can actually give negative real interest rates. And like I said, we any which ways have an inversely proportional relationship between dollar and gold. By the way, remember that both assets are looked at as a safe haven asset. Dollar is falling, so investors are obviously flocking to gold as a safe haven because it's giving great returns. In fact, this year itself, we've seen more than a 20% rally in US gold prices and more than that in Indian gold prices. So you have firstly the enormous economic uncertainty that is causing investors to flock to gold. Secondly, the tremendous amount of stimulus being pumped in by US, Europe, etc. Thirdly, negative real interest rates, which all the more make gold a much more attractive commodity. The lower the interest rates, the more the interest towards a non-interest paying asset like gold. So because of this perfect storm that's brewing, investors are sort of betting on the fact that that move from 1900 to 2000 may actually take way fewer trading sessions than it took from 1800 to 1900 for gold.